please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
I'm Arundhati Ramanan and you're watching Reporter's Diary. Straight to the day's trading action. Strong global cues and an appreciating rupee saw bulls make handsome gains on the last day of the trading week. So let's bring those charts up for you. The Nifty regained 11,500, led gaining more than 1%. The Sensex managed to keep its head above the 38,000 mark. Broader markets outperformed with the Bank Nifty and the Midcaps rallying over 350 points each. And fuel prices continue to climb across the country. Today, oil marketing companies have hiked the prices of petrol by 28 paise, taking the price to 81.28 rupees per litre in Delhi and 88.57 rupees in Mumbai. Now, diesel prices are also at fresh highs, with the fuel retailing at 73.30 rupees in Delhi and 77.82 rupees in Mumbai. Barring September 5th and 12th, where OMCs maintain status quo, fuel prices have been hiked every day for the past few weeks. Prime Minister Narendra Modi is expected to hold a crucial meeting this weekend to take stock of rising fuel prices and the depreciating rupee. Remember, earlier, top government officials had told CNBC-TV18 while they were vigilant on both the rupee and fuel prices, they were not keen on taking any panic measures. So the big question is, will the PM announce any measures in his meeting this weekend? Shireen Ban joins us now with a check on the key issues. Shireen?
There is a crucial meeting that the Prime Minister is holding on Saturday with top government ministers and officials to review the economy. The message that we are getting from our sources is that while the government is vigilant and weighing its options, it will only act when it feels appropriate. So the message is that they may hold fire for now. The sense is that there is no need for a knee-jerk reaction on the rupee because the economic fundamentals continue to remain strong, and also very mindful, especially within the finance ministry, that fiscal prudence is crucial to ensure that bond yields don't spike further and that the rupee stabilizes. In fact, the finance ministry is clear that it wants to stick to the fiscal deficit target. But remember, it is an election year, so eventually this will require political support and a political call. Specifically on the issue of oil, political demand in the first quarter was to lower fuel prices by almost 5 rupees a litre. Now, the demand was that the centre cut excise by 2 rupees, the state reduce VAT by 2 rupees, and OMCs absorb a 1 rupee hit. But that demand was turned down. The finance ministry clearly believes that it is not advisable to go back to either a subsidy sharing mechanism or act on cutting excise just yet, because that will have a multiplier impact, because the signal it will send out will have an impact on bond yields and then consequently on interest rates, making things even worse for the government. So the path that they would like to take for now is to wait it out to see how the Iran sanctions impact the oil markets, and maybe, if need be, act closer to November post the Iran sanctions coming in. Remember, the government is weighing its options on oil payment for Iranian crude, also hopeful that the dialogue with the US on importing Iranian crude will be fruitful. The message that the political class, especially within the BJP, is going to be sent out is that an excise cut at this point in time will restrict the government's ability to spend on things like Ayushman Bharat, which is the Prime Minister's health insurance program, and other development schemes. So that's going to be the sales pitch to the leaders within the BJP. Separately, there is concern on GST collections, on GST revenue. But North Bloc hopes that the direct tax mop-up will offset the shortfall on the GST front. So at this point in time, extreme caution on announcing any other kind of cut when it comes to the GST, and hopeful that things will pick up there. So net-net, the view is that Wednesday's fall and the dramatic recovery in the rupee suggests and indicates that there was overshooting, and that India is in a much better position among the emerging markets because growth is strong and our fundamentals are good, and hence the government believes that the currency should stabilize.
Right, Shireen. So we're going to have to wait and see what comes out of that meeting this weekend. Thank you so much for those details. We also spoke to a whole host of former policymakers and experts on their expectations from the meeting. Let's hear out what they had to say.
There is no reason to panic, but the fact is that media has created panic. The fact is that the political system is making a massive issue out of it. So the government has to be seen to be doing something. And I think what the DEA secretary was doing was essentially what the Governor Reserve Bank should have been doing, which is talking the market up. The government has been very measured in the response, and I think they should continue to be so. If at any point the government is seen to be panicking, that would send just the wrong message at the wrong time.
They are sending the message that they believe that the fundamentals of the economy are really sound. They believe that the rupee level is not warranted, the current rupee level that we are seeing. And let's just look at the previous, and they have talked about or hinted that the FCNR, the foreign currency non-resident deposit bonds, are under consideration. Whether they are or not is not really or at issue over here. They are trying to communicate to the market that, listen, we are aware of what's going on, and very emphatically telling the market that this level of the rupee is not warranted by the Indian fundamentals.
In fact, CNBC-TV18 spoke to market participants, including top foreign and domestic brokerages and fund houses, on their expectation from the Prime Minister's review meeting on recent macro developments like the rupee slide, rising oil prices and the widening current account deficit. Anisha Jain joins us with the findings. Anisha, what is the market expecting?
Oh, well, yes, all eyes are on the economic review that is scheduled this Saturday, wherein the Prime Minister will take stock of the economy. As you mentioned, the sliding rupee as well as the move in crude has actually caused a bit of concern for the market participants, and they are looking forward to what comes out of this meeting. As you pointed out, we talked to a whole host of experts as well as the foreign and domestic brokerage houses and market participants to see what are they expecting from the meeting that is expected to be scheduled this Saturday. Now, first up, we asked them, is there any immediate action that is required to stem the rupee slide as well as manage the fuel prices? Now, 80% of the participants believe that there is no need for the government to take any action, that there is no need for the government to take any panic reaction to such move, and the rupee as well as the fuel should be allowed to move as per the market dynamics. Secondly, we asked them if they are expecting any specific steps to be announced after the meeting tomorrow. Well, again, 80% of the participants believe that we might see some generic statements coming in through, but no specific steps might be announced. So then what are they expecting in terms of statements? Well, majority of them believe that they will talk about adhering to the fiscal policy. You mentioned how it is being a bit of concern. They are expecting that they will talk about maintaining the 3% mark that the street is expecting. Other than that, it is expected that they will reaffirm the fuel pricing policy and may not talk about any subsidies or any cuts that we were expecting on in terms of the rates as well. But this is what the majority is expecting. There are some whispers and some portion of the market that is expecting some specific steps as well. And they expect that they might open some special RBI window to manage the needs of the oil importing companies. Because do remember, a lot of the rupee slide has actually been put onto these oil marketing companies. So they are expecting a special window might be opened up. Other than that, they are talking about some FCNR type issue to tap the NRI funds. They're talking about some other export incentives and some restrictions that could curb the imports as well. So that is what some of the market participants are expecting as well. Other than that, if you talk about what regulatory action is expected, well, they believe more, in fact, this is unanimous, that they say that the interest rate hike is possible in the next credit policy, but maybe no inter-policy rate move is what we see. So most of them believe that in the next credit policy, we might see a rate hike, but that will come out tomorrow.
Right, Anisha. Thanks so much for the market. They're not expecting any specific action on the rupee or fuel as well. Meanwhile, Finance Minister and top North Block officials will meet the Prime Minister for stock taking ahead of tomorrow's crucial meet. Sapna Das joins us now. Sapna, what else are you picking up?
Well, the expectation also is probably the RBI governor may also be there in a meet with the Prime Minister today evening. This is what we are getting to learn. No confirmation as such, but it would be but natural that both, I mean, the fiscal side and the monetary side, I mean, you know, these are big calls to be taken by the government at the highest level. So my understanding is this, that probably the RBI governor is also part of the, you know, pre-review meet today, so to speak. And enough reporting has been done for tomorrow's big event, I mean, tomorrow's big meeting. It's a serious review, and as I've just mentioned, whatever needs to be done will be taken. That call has to be taken at the highest level. And whether government would like to react now or hold the firepower, that's the big question. The sense that we have gathered is probably they would like to hold the firepower. Probably there is no requirement for any action or reaction, so to speak, immediately. But these are things, it just totally depends on what call is taken in that meeting. So these are things where one cannot be very, very certain. So, all eyes on both these review meets, and we have to wait and watch and see what happens from Monday onwards. And if there's any urgency, government can also react on a Saturday evening through a press release or through, statements to the media.
Absolutely, Sapna. So today and tomorrow, crucial day of government. Thank you so much for all those details. Note, it is time for us to take a short break. But coming up, senior lawyer Dushyant Dave gave advice State Bank of India to move Supreme Court just days before Vijay Mallya left the country. More on this when we return. Stay tuned. Welcome back. You're still with us on Reporter's Diary. 2 days after Vijay Mallya made an explosive claim that he met Finance Minister Jaitley before leaving the country, there's a fresh twist to the saga. Senior advocate Dushyant Dave claims that State Bank of India was informed about Mallya's escape plan. Dave said that 4 days before Mallya's departure, which is 28th of February 2016, he had advised State Bank of India's legal team to move the Supreme Court restraining Mallya from leaving the country. He alleges that SBI agreed to move the apex court but failed to do so at the right time. However, the State Bank of India has dismissed Dave's claims. SBI Chairman Rajneesh Kumar has said that there has been no laxity on its part or its officials in dealing with loan default cases, including Kingfisher Airlines. He added that the bank has been taking proactive and strong measures to recover defaulted amounts. The National Company Law Tribunal has allowed former Fortis Health promoter Shivinder Singh to withdraw his petition against elder brother Malvinder and former CEO of Religare Sunil Godwani. Shivinder had earlier this month filed an application in the Delhi bench of the NCLT, alleging that the collective and ongoing actions of Malvinder and Godwani led to a systemic undermining of the interest of the companies and their shareholders. Now, the green signal comes a day after Shivinder moved the Company Law Tribunal, seeking to withdraw his petition out of respect for his brother. However, the NCLT allowed Religare Enterprises, which was also a respondent in the case, to use the claims, allegations forwarded in Shivinder Singh's plea for any recovery proceedings. This, as Religare's counsel argued, that since Shivinder's plea alleges that Malvinder Singh acted to divert funds from the company, they should be given the liberty to seek recovery of funds. The Company Law Tribunal allowed Religare to initiate proceedings, but they would have had to move a separate application for that. Now, as petrol and diesel prices jump to lifetime highs, logistics and transport major Gati feels that it is time to adopt electric vehicles for cargoes as well. Sources tell CNBC-TV18 that the company is in talks with auto manufacturers to develop EVs for the logistics industry. Nithya Balakrishnan joins us now with more details. Nithya, Gati is betting big on the electric mobility foray.
Given the government's push towards e-mobility, implementation of GST, and of course, like you mentioned, rising fuel prices, no surprise that logistics player Gati is looking at betting big for electric vehicles for delivery of cargo in the future. We're given to understand after a successful pilot of e-autos for delivery of IK products here in Hyderabad, they are looking at taking similar pilots across to New Delhi and other metros as well. In fact, the electric vehicle foray for Gati will of course take place in a phased manner, but we're given to understand they do not just want to be consumers of electric vehicles, but are also interested in helping set up infrastructure, charging stations, and of course ensuring after-sales service and support for electric cargo vehicles across the country once the system is established. Now, what we're picking up from sources is that Gati is in talks with OEMs and players like Ashok Leyland, Tata Motors and M&M, all of which have a significant presence in the EV story, and they are looking to collaborate with these players for the same. Now, we did speak to Gati, and officially they did not want to comment on specific talks, but they have indicated that they are looking to participate significantly in the electric vehicle story. They are looking at e-cargo vehicles in their fleet in the next couple of years and significantly adopting EV into their fleet as well. And they will be participating in the ecosystem for electric vehicles across the country. One more thing that they've indicated is that government support, both central and state, will be mandatory in establishing any kind of an electric vehicle footprint here in India.
Right, Nitya. Thank you so much for bringing us those details. Now, quick look at the other headlines that we're tracking for you today. The Supreme Court has modified its order on dowry harassment. The court has scrapped the requirement of a family welfare committee to examine the veracity of complaints dowry cases. The court also said that police officers, based on facts of the case and governed by the legal provisions, should take these decisions on their own. It also said that anticipatory bail provision shall remain intact for the husband and his family members. Latest in the ISRO spy case, the Supreme Court has awarded a compensation of 50 lakh rupees to scientist Nambi Narayanan. Passing the order, the top court said that Narayanan was unnecessarily arrested and harassed. The court also set up a committee under Justice D.K. Jain to look into Narayanan's complaint against cops who framed him. Remember, Narayanan was arrested in 1994 on allegations of espionage. He was later exonerated by the Supreme Court in 1998. A non-bailable arrest warrant has been issued against Andhra Pradesh Chief Minister N. Chandrababu Naidu and 15 others. This in relation to an 8-year-old case relating to his protest over Babli project. Now, the district court in Maharashtra ordered police to arrest and produce Naidu and others before it by September 21st. Meanwhile, the Telugu Desam Party is protesting across Andhra Pradesh and Telangana. At least 40 people have lost their lives in Bareilly and adjoining Badon districts of Uttar Pradesh due to high fever in the last 14 days. The hospitals in the region are flooded with fever patients, and 3 teams of doctors have been constituted to look into the cases. According to some reports, the parasite, which causes the most dangerous form of malaria, may have caused the spread of this high fever. 19-year-old CBSE topper from Haryana was allegedly kidnapped and gang raped by over 12 men in the Rewari district. The incident occurred when she was on her way to attend her coaching classes. The parents of the girl alleged that the police refused to file an FIR against the accused men. However, the police say that a 0 FIR has been filed and the accused, who have been identified, will be arrested today. And latest from the Kerala nun rape case, Missionaries Jesus Inquiry Commission comes out with a statement, and as a proof that no rape happened, they released a picture of the complainant with the bishop after the date on which the rape happened. According to the complaint, meanwhile, the bishop has been called for questioning on the 19th of September. Network 18's Neethu Raghukumar joins us now. Neethu, take us through the latest developments.
Now today, the Missionaries of Jesus, this is the same congregation to which this nun belongs, had come out again with a statement. For the past few days, they have been coming out with statements saying that all these allegations against the bishop are false, and they have been doing victim shaming and even raising questions on the character of this complainant nun. So today they have come out with a statement saying that these are the findings of their inquiry commission, the initial findings, and as proof of it, they have attached a picture of this complainant, though the law says that the victim's identity should not be revealed. And they have added one line in the statement that anybody who uses this picture cannot use the identity, cannot use her name, or will have to mask her face. That's all, and he issues this picture as a proof, saying that according to the complainant, on a particular date the rape happened, and this picture was taken the day after that, where you can see the complainant and the bishop along with another father sitting there, and she is smiling. So they're trying to say that this picture shows that something like this cannot happen. They have also said that there is a conspiracy behind this, and that has been what the church, the congregation, as well as the bishop has been saying right from the beginning. Now, as far as the investigation is concerned in this case, Kerala police have issued a notice to Bishop Franco Mulekel asking him to appear before the investigating team on 19th. So the bishop will have to answer the questions by the police on that day. There are several inconsistencies in the statement, and he will have to answer all this, is what we are understanding. Now, yesterday the Kerala High Court had also asked for a progress report. Police had submitted it in a sealed cover, and the High Court seems to be convinced with the progress so far.
All right, Neethu. So the bishop, they're going to be called in for questioning on the 19th of September. Thank you for those details. On that note, it is time for us to take a quick break. But up next, on the 10th anniversary of the Lehman crisis, we will bring you exclusive interactions with some of the most prominent policymakers and economists who dealt with the crisis at close quarters. That on the other side of this short break. Stay tuned. Welcome back. You're still with us on Reporter's Diary. Saturday marks the 10th anniversary of the collapse of the Lehman Brothers, one of Wall Street's most influential investment banks. The collapse of the Lehman Brothers, the biggest bankruptcy ever, was the key inflection point of the financial crisis in America, which also saw a ripple effect across all major economies in the world. Through this week, we have been speaking with former RBI governors to get a sense of the lessons that were learned after the 2008 global financial crisis. And that's not all. CNBC's Andrew Ross-Sorkin also spoke to JP Dimon, the CEO of JP Morgan, and Timothy Geithner, who was the president of the New York Federal Reserve when the Lehman Brothers collapsed. Take a look.
Actually, I became sensitive to the impact of global factors on a domestic economy when I was ED in the IMF.
And you were ED in the IMF? That is 2002?
To 2003. I saw the suffering of Turkey, Argentina, Brazil, Mexico.
Okay.
So therefore, from then on, I felt that one of the most important things for emerging market economies is to be very conscious of the risks from the global economy.
Okay.
And this, after I joined as governor, somewhere around 2000, in a couple of years, I realized that our EMIS as a whole, there are global imbalances and they should be warned. So actually I gave a talk in Paris on the subject.
If there was one central bank in the world that was actually prepared for the crisis, it was the Reserve Bank of India, because as we now know, it's well known that the RBI under Governor Reddy had instituted macroprudential measures. In fact, macroprudential became a fashionable term after the crisis, but much before it became fashionable, the Reserve Bank had tightened the regulation of the financial sector, both banks and non-banks. So if there's one central bank that was prepared, it was the Reserve Bank of India.
We knew that the subprime crisis was building up. We had seen Bear Stearns being absorbed by another major bank a few months earlier. The difference here was the fourth largest investment bank in the United States went bankrupt. So that was clearly a bit of a shock. It's only in subsequent days when the extent of the contagion, these toxic assets were not just concentrated in the US banking system, they actually had spread over in the European system also. And secondly, the sudden lack of trust within the banking system, that nobody quite knew whose balance sheet was going to go next.
I won't put the entire blame on Lehman. It is true that in 2007, 2008, we were essentially being driven in part by a very strong world economy. And because of the substantial growth in India, I think bankers were optimistic, promoters were optimistic. The last run of projects had worked very, very well. And so they started a whole new set of projects. And as is the tendency at these times, with more leverage, less equity, more optimism about the future, turns out the future wasn't as rosy as the past.
Whether Lehman had been bailed out or not, the crisis was going to unfold. The leverage was there, the repo was there, there's a lot of losses in mortgages, money was sloshing around the world, government started guaranteed deposits, which actually made it hard for banks. So it was going to unfold anyway, whether they went bankrupt or whether they were bailed out.
It was a crushing burden of responsibility. I think the hardest thing was just trying to figure out what would work. What could we do? What was the art of the possible within the constraints we had?
And with that, it is a wrap on this edition of Reporter's Diary. Many thanks for watching, but stay tuned to CNBC TV18. Coming up next, Changing India, which is a CNBC TV18 special. Stay tuned for that.